Good morning, everybody. It's Thursday, October 3rd, 5:25 a.m. Central Time. Grain market's a little bit lower this morning. December corn futures down 1.5 at 431. November soybeans down 8 3/4 at 1047 1/4. December Chicago wheat down 3.5 at 611 3/4. December Kansas City wheat down 3 3/4 at 615 1/2. December spring wheat down 1 1/4 at 647 3/4. We got a whole bunch of weather to start off with today.
So, U.S. corn and soybean harvest is likely to move quickly amid a dry forecast. USDA reported on Monday that the harvest pace of both crops was ahead of average. This morning's most recent Euro model run suggests no material rainfall throughout the central U.S. during the next 10 days. The extended GFS offers more of the same through October 18th. Temperatures are likely to run above normal for most of the Corn Belt through the 15-day period.
Harvest pace is fast and furious and will continue to be that way, which leads me to the question when and if harvest pressure is going to enter the marketplace. When are farmers going to start selling what is supposed to be a massive corn crop and a massive soybean crop? I'm told, of course, that the farmer is undersold as it relates to this year's crop, but that phrasing, undersold, that only applies when the markets are down and below production cost. If this rally continues, then you're not undersold all of a sudden. Then you look smart, right? So anything could happen, but the harvest pace looks wide open. We've got no issues with early frost or any of that stuff. As it relates to the river, we are above normal at Memphis this morning. A lot of those rains that were associated with the hurricane came into the Ohio River Valley and made their way into the Mississippi, which has helped. Now you look at the back end of this, by October 17th, we're going to be back below normal. And if they don't throw some rain into the forecast and you get back into a drought type situation or just an extended period of dryness, you could be back into restrictive territory, which of course would be a bad thing for logistics and basis and a lot of different things. But for the moment, the river looks all right.
A small storm cluster moved over northern Mato Grosso early this morning. Rains are likely to accumulate in northern Brazilian soybean areas through the middle part of next week. The 10-day Euro model offers scattered rain for a good chunk of Brazilian soybean country. Additional rains are seen in the 16-day GFS model. Relative to normal, rainfall during the next week will remain well below normal across most of the country. The 16-day GFS anomaly map, however, suggests that rainfall in total will be closer to normal in many key soybean areas. It would certainly appear as if Brazil will return to its normal weather pattern later this month. Forecasts, of course, are subject to change.
Forecasts are subject to change, but they haven't changed a lot. They continue to indicate that mid-October is when we're going to see our return to normal rainfall. And this last map is probably the best indicator of that. This would be rainfall versus normal. And some of these brownish areas, yeah, they're still going to be below normal, but these like white and green and blue areas, that would be above normal. So you're going to return to something that resembles normalcy in Brazil. And they're going to be fine. The planting window is large enough. They've got plenty of time. It's super early. It looks like it's going to improve. So if there was any weather premium in the soybean market because of this dryness, I think it should go away. And maybe that's why beans have been a little bit softer recently relative to corn and relative to wheat. That's not to say that there isn't time for a Brazilian weather or crop scare event. I mean, you could see rains come back for a few weeks here. And then if you get into November, December and it's dry, you could see the bean market rally on that. So we've still got a lot of growing season to go there.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video with Matt Bennett?
Nothing but grain marketing talk, discussion, recommendations this week. Matt was on yesterday. Is the farmer selling this rally? And should the farmer be selling this rally? We talked about this as it relates to not just general price direction, but also you got to consider things like the carry in the market, interest payments, storage payments. How does all of this kind of work in tandem or together to help you toward a decision? I did a video about soybean HTAs and capture and carry earlier this week, and also did a cash grain marketing review. I believe that was out on Monday. Everything that I've advised for 2024 corn and soybeans. If you guys want to see the premium stuff, go to standardgrain.com this morning. I know you're busy. I know you're in the truck. I know you're in the combine. I know things are fast and furious, as I mentioned, but it'll take you on your phone about 30 seconds to sign up. We do Apple Pay, Google Pay. Everything is accessible on your phone. It's just one click. to open the videos and the emails. There's no login instructions or credentials, anything like that. It's super, super easy to do. Check that deal out today, guys. $50 a month. Cancel it anytime. No other fee, no other obligation. Nobody will try to sell you anything else. Give it a shot.
Estimates for Russia's wheat exports have been reduced. Sovicon lowered this season's export forecast to 47.6 million metric tons, down from its previous estimate of 48.1 million metric tons. The reduction is due to unfavorable weather impacting harvest. Despite the lower estimate, wheat shipments from July through August were only slightly lower than last year's record exports over the same period. Russia's total grain exports are projected at 55.4 million metric tons, down almost 2% from Sovicon's previous projection. Russian wheat stocks are currently at 24.8 million metric tons, down 14% from the same time last year.
So this estimate that they've got 47 million and change is only slightly below USDA's most recent estimate of 48. It's a big deal, of course, that they've got some dryness and drought in Russia and Ukraine, but it's early. It's early. They're planting, or they're wrapping up planting. So it's a big deal. And I've got some good maps from our friends at Crop Profit. Over the last 30 days, Russian winter wheat areas have seen only 26% of their normal rainfall. Ukraine is doing better. Their winter wheat areas have seen 79% of their normal rainfall. The forecasts look okay. Both the Euro and the GFS indicating that Russian winter wheat areas will see 60 to 70% of their normal rainfall over the next 2 weeks. So it's not a disaster, but maybe at some point we're going to have to trim some production from the Russian production estimates.
More news concerning Russia. A Russian drone attack damaged Ukrainian port infrastructure on Wednesday. The attack damaged a grain facility and buildings near Ukraine's border with Romania on the Danube River. The situation sparked concerns over trade in the Black Sea and caused Chicago wheat futures to rally to a 3.5-month high. The attack also targeted Ukraine's northern Sumy region and knocked out electricity to almost 80,000 people. Reports from Russia indicating that drought conditions are worse than usual for their winter crops also bolstered wheat futures yesterday.
Wheat futures have acted very, very well. So Kansas City wheat futures and the SRW and spring wheat varieties look similar. Big breakout on the charts yesterday. Highest trade since June 20th. Just overnight, there was some more news out of the Middle East. We didn't have a full story on this, but Israel's military said it killed 15 Hezbollah militants in South Lebanon. And this was just a couple days after Iran, of course, launched its largest ever assault on Israel. That was on Tuesday. So you've got a lot of tensions. We had the chart yesterday, I believe, about the Middle East and how you've got a lot of smaller wheat producers in the region that kind of add up to a sizable portion of production. So the wheat market's acted very, very well. You've got tensions in the Black Sea. You've got tensions in the Middle East. You've got a tightening global stocks situation. Now, the wheat market, I'll be the first to admit, never makes any damn sense to me in a lot of situations. So just because you've got some friendly fundamentals doesn't mean we have to rally, but it looks a lot better.
U.S. ethanol production increased last week. Weekly output of 1.02 million barrels per day was up 2.1% on the week and up 1% versus the same week last year. Ethanol stocks were pegged at 23.5 million barrels. The print was down marginally compared to the previous week, but up 6.4% compared to the same week last year. Implied gasoline demand was down 7.4% compared to the previous week and down 1.1% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 1% compared to the same period last year.
Ethanol production is very strong, and the marketing year is young, but through the first month of the marketing year, the pace of ethanol production is up 2 or 3% versus the same period last year. USDA says we're going to use the same amount of corn this year that we used last year for ethanol production. If they're off by 2 or 3%, and we've got to raise the corn demand number, 2 or 3% on 5 billion bushels and change is substantial. So that would be very helpful. This is a bright spot when it comes to demand.
President Joe Biden is calling for talks to resume between striking dock workers and U.S. port employers. Biden is not planning to intervene in the strike, but believes it could turn into a man-made disaster if not resolved. Talks have stalled between the International Longshoremen's Association and the U.S. Maritime Alliance. The two sides have not been able to agree on a wage increase and the implementation of automation. According to Biden, the 6 companies that control the ports under strike have made huge profits and need to resume negotiations. The strike will likely cause consumer prices to increase and cost the U.S. economy billions of dollars.
Okay, so Biden could go ahead and do Taft-Hartley. He says he's not going to do it. He's in favor of negotiation, and that's cool. For grains, we talked about this earlier this week. So bulk carriers, which is 90% of grain exports, are not going to be impacted. What could be impacted would be the 10% that we ship via containers, and then some other ag-related items like fertilizer, other inputs. If it gets bad enough and logistics get backed up bad enough, maybe that does impact bulk carriers. So we're not to the point where like people are really worried yet, but you could get there and get there pretty quickly. What did cattle do yesterday?
Cattle futures had a strong day. Live cattle were up 85 cents to 295 higher. Feeders were up 307 all the way up to 387 higher. Box beef was lower yesterday. Choice was down 36 cents to end the day at 299.81. Select lost a $1.37 to close at 283.93.
Outside markets, a little bit of movement today. U.S. dollars higher, stocks are lower, and have been under some pressure. The S&P is down 19 points. The Dow Jones down 160. Bonds are off a little bit. Crude oil is up $1.62, and the November WTI at 71.72. Have a great day, guys. We'll talk to you